the stock that I recently purchased has been Kimberly-Clark. Now, this is a stock that I have been in for a long time, and so I've been adding to my position recently, and I'm going to explain why I chose to add to this position versus another position in my portfolio. Hey everyone, it's Ian from ppcian.com. Today's video is a very, very special one. It is one that many of you have been asking for months. And so I thank you for your patience. Today I want to discuss a stock that I personally purchased recently, and I want to discuss how I personally analyzed that stock. Now, what I realized is this is going to have to be a multi-part series. I was postponing it. I was thinking I'm going to film this huge video that's like 1+ hours long. I think both for myself and also for all of you out there, it's going to be better if I make this into bite-sized chunks so that it's digestible, it's easy to understand. Someone can take notes, they can watch, they can go home, they can practice some of the skills that they learned, and then they can come back. They can come back to the next one when they're ready. And I also thought obviously this would be a little bit easier for me from a production standpoint. It's easier for me just to break them up into smaller videos. So today is the first video in my series about investing in dividend growth stocks, and in particular about analyzing investments that I personally make. Now, before I get into this video, I want to just give a few general overarching themes. One, I am a dividend growth investor. I personally invest for dividends and cash flow. This means that I invest in the stock market and other instruments that provide cash flow. They provide dividend checks to me. And the reason I do that is I want financial freedom. And at that time, my dividend-paying stocks will be covering my living expenses and will free up my time to have more flexibility, more opportunity in life. And so that's theme number one. And so obviously as I go through this tutorial, it's going to be very different from someone else who might have a very similar tutorial about investing in growth stocks. That's not what I'm about. I'm about investing for cash flow. And certainly the stocks that I invest in have experienced capital appreciation and growth. But first and foremost, when I analyze stocks, I have to analyze them from a dividend perspective. And so certainly if someone wanted to learn about trading or investing in penny stocks or any other type of investing, those are not going to be covered in the video today. Today is really a video about analyzing dividend growth stocks. Now, certainly before I get started, I also want to mention this is my personal methodology. This is the methodology that I personally use when analyzing stocks. It may not work for everyone. It works for me. I'm just sharing my personal story here on YouTube. So today's video, as I mentioned, is going to be the first part of a several-part series, and I'm going to start with the basics. Basically how once I've found a stock, how that stock just goes from an idea to going onto my watch list. I want to share some of the easy, practical screens that I do up front before anything else to determine whether this stock is worthy of future consideration or whether I should just completely wipe it off the list. And so if you've been watching my channel for a while, you know that I don't talk about the stocks that I purchase too frequently. There's a reason for this. I think it's really important online that people watching my channel, other channels, blogs, make their own decisions, find their own opportunities, because for dividend growth investing to work, one has to be in it for a very long time, for decades. And so by exposing my entire stock portfolio, I just want to be very careful that people out there watching still take charge themselves. They take a hands-on approach to investing. They don't necessarily get biased by the ideas and the choices that I've made, because more than anything, I want to provide frameworks here. I want to provide ideas, and I want to empower everyone watching to take the next steps on their own. That being said, for today's video, I do want to share one of the stocks I recently purchased, because that's the stock I'm going to be analyzing hands-on through this entire several-part series. The stock that I recently purchased, and this is, if you've been watching my videos, I've been counting up change. I've been finding ways to gather more money that I can get into the stock market. Well, all those quarters, all that change that I counted up and I invested, the stock that I recently purchased has been Kimberly-Clark. Now, this is a stock that I have been in for a long time, and so I've been adding to my position recently, and I'm going to explain why I chose to add to this position versus another position in my portfolio. For those that don't know, Kimberly-Clark is a large multinational company based out of the United States. It's a multi-billion-dollar market cap. We'll get more into that later. And they primarily produce household goods in the form of paper products. They're best known, for example, for their brand of Kleenex, the tissues, and also they're very well known as well for their diapers that they produce, the Huggies brand of diapers. And so paper is at the core of many or most of the products that Kimberly-Clark makes, and then they sell these to both businesses and consumers in the form of very specific brands. And I personally have experience with many of their brands over the years, and I like their brands. And that's one of the reasons I like this company, is because I understand what they do, I like their brands, and I believe in the company. I like to get behind something that I understand and I believe in. And it really also just fits my overarching theme that I like to invest in recession-proof companies. And something like Kimberly-Clark, look, we all get sick whether the economy is good or bad. We're going to need Kleenex. And just from my personal experience, the Kleenex brand tissues are worth the extra money. They're worth it because they don't hurt your skin. They don't mess up your nose. They're very good Kleenex, very good tissues. And here's one of the other things that's funny. You even catch it in my language here. Kleenex has become synonymous with tissue. Kleenex is Kimberly-Clark's brand. But when someone needs a tissue, hey, I just sneezed, I need a tissue, oftentimes they'll just say, I need a Kleenex. It's very interesting when a company has a brand that becomes part of our common language. At least in my opinion, that's a sign. That's a really, really good sign of a brand that will be around for a very long time, if not forever. And certainly being a parent, being a father, I have extensive experience with Huggies brand as well, with multiple brands of diapers and with Huggies brand, and I have only good things to say about that brand as well. And so I really like to invest in companies that I understand, that I love their products, I can stand behind their products, and I believe that their products have a competitive advantage versus other brands. So I have this stock idea. And I did another video on this, how to source ideas, so I'll link to that below. Once I've sourced this idea, Kimberly-Clark, how does the analysis begin? First and foremost, I go to Yahoo Finance, I look at the 5-year chart, and I just print it out. And so literally what I have in front of me here is a printout from Kimberly-Clark's Yahoo Finance, and I just start going through some of the very, very top level numbers. And again, I'm going to start very basic today. This series is going to progressively get more complex over time. But that's okay. Everything starts basic because I just want to determine at this point, does Kimberly-Clark belong on my watch list, or should I completely box it out and not look at it again? So first thing I look at is basically what we already discussed. Have I ever heard of them? We've talked about that at length. I've heard of them, and I not only heard of them, I stand behind them, so they pass filter number 1. Filter number 2, I look at their market cap. Market capitalization, also called market cap, is basically the price per share times multiplied by all of the shares outstanding. And it gives a sense of how big the company is. What's their aggregate value? Well, for Kimberly-Clark, the aggregate market value as of today is $41.156 billion. For me, I like companies that are not too big, not too small. Kimberly-Clark really, really fits that mold. At 41 billion, they're big enough where there is probably not going to be another company coming in and easily disrupting them. And if one does, they can just buy that company. And 2, they're not too big where they can't grow more, because there is a law of large numbers here. And certainly for companies in the multiple hundreds of billions, and I own them and I like them, I love them, there's many good ones. But at the same time, something like a Kimberly-Clark, it's really in a sweet spot at 41 billion. That could easily go up to 81 billion to 200 billion. You've got room in there for growth. It's not so big. it's going to be more difficult to grow just based on the sheer size of the company. And so I like that. I like companies anywhere between, I would say, maybe $3 billion range and 300, 400 billion. So I have the whole spectrum of market caps. But I would say for me, a sweet spot is always in that mid like 50 billion type of range, like Kimberly-Clark is at 41. And so screen number one, they passed it. How would Kimberly-Clark fail this? Let's just say their market cap was like 200 million. For the purposes of dividend growth investing, I'll just count that out at that point. It's just too small. And I do own stocks in my portfolio. Well, I shouldn't say stocks, more investments in privately held companies through angel investing. Completely different topic I don't want to get into today. So I don't want to completely rule those out. But the main purpose of my investing is for cash flow, dividends. And when it comes to my cash flow and dividend focus, I'm looking for companies above 3 billion. So if it were below 3 billion, I would just count it out. And also, filter number one, if I had never heard of them before, I wouldn't completely count them out, but that would certainly be a strike against them. So let's go on to filter number three. I look at what is the dividend yield? Do they even pay a dividend? Well, according to Yahoo Finance, right now the dividend yield is 3.39%. That is a great starting yield. That is fabulous. I personally target stocks with a starting yield in this range. My overall current yield of my portfolio, I try to optimize around towards a 3%. Now my yield on cost, between 3 and 3.5. My yield on cost for many of my positions is far higher. I shared one recently that's at 16.5%. That is the current dividends divided by my purchase price. And this takes years to happen, but it does happen. And so what I'm talking about more here is the starting yield. I'm taking a new position or I'm adding to a position. What is my starting yield? Because it'll only grow over time. My yield on cost as the dividend gets increased each year. What is the starting yield? I like a starting yield that's in that 3 to 3.5% range. I'll go as low as 2%. I'll go as high as maybe 5%. If it gets too low, it's just too low for me. If it gets too high, it's a risk factor. It's a factor of unsustainability. And so for me, this is a good sweet spot. It is indicative of a healthy dividend. And so again, they pass the filter here. They pass it with flying colors. Let's say, however, Kimberly-Clark's current yield was like 1.8%. And I already own shares from I've been buying for a while. I probably wouldn't add to my position at a 1.8% yield just because it doesn't match my criteria for what I'm looking for with current yield. And it's indicative of a stock price that's gone up over time as well. And so certainly if the current yield is really low, I'm probably not getting good value for my investment. So the next factor that I look at is the dividend payout ratio. Now, the dividend payout ratio is not directly covered on this page. One has to calculate it, but it's very easy. And on other pages on Yahoo Finance, it's directly represented. But I think it's important for anyone learning to know how to calculate these numbers themselves. So dividend payout ratio, what it means is a percentage of the company's earnings, how much are being paid out as dividends. Well, it says here that the dividend per year is $3.88. It also says the earnings per share is $5.99. Well, 388 divided by 599, payout ratio right now is around 65%. That's a good payout ratio. If the payout ratio was, let's say, 100%, I wouldn't want to invest because it means that every dollar the company is earning, they're paying out. That's not healthy. It's too aggressive. It's too risky. Anything in that 40 to 65% range is healthy. And this certainly depends on industry. Certain industries like utilities have much higher payout ratios, so you have to kind of look at this industry by industry. But for consumer staples, non-cyclicals like Kimberly-Clark, payout ratio about 65%, that is perfect. That is just fine with me. And so they passed this test as well. Next filter, price per share. So I like to look what's the current price per share, what's the 52-week range, and where has it been in the last 2 years. Well, basically Kimberly-Clark is hovering right now near its lower point for the last 2 years. It's corrected recently, it's come down in value. And so looking at the last 5 years, it's certainly up, but based on the last 2 years, it's at a reasonable valuation. And let's even look at the 52-week range. The low is $109.67. The high is 136.21. Right now it's at 117. Well, it's actually kind of more in the middle of the range now. It's probably come up a little bit in recent days and since I purchased the stock. But still, even at 117, reasonable price. Once I find a dividend growth stock and I add it to my watch list, I don't want to buy when it's at an all-time high. I will wait. I will wait for it to correct. I will wait for it to be at a good price. Now, this is because I have a very large portfolio. If I were just starting out and maybe I only had my first 5, 10, 25,000 invested, that would be a different case. Then I would just be getting started. I would wait. There's no better time to start than now, and I would just start. But given the size of my portfolio now, I like to be a little picky on my entry points, and so I'll target stocks once they've corrected a bit. And so Kimberly-Clark, they certainly fit that filter right now. What else? I look at the PE ratio. PE, price divided by earnings, is a representation of how richly valued a stock is. It is actually just literally printed here. It shows that the PE ratio is 19.54 on a trailing 12 months. I always look trailing 12 months. I don't like forward PEs. They're too risky. I don't know what's going to happen in the future. I like to look at backwards. And so trailing 12 months, 19.54. It's pretty good. I will buy dividend growth stocks anywhere between a PE of, I would say in the low end, like a 12, on a high end, maybe like a 24. This market right now is very richly valued. So for a world-class blue chip company like Kimberly-Clark, coming in at a 19.54, that's reasonable. That's a reasonable entry. It's fairly valued, but it's since it has come down from its highs, since the dividend yield is good, since I love the company I'm adding to an existing position, I'm okay with that. Would I have liked to buy at a 15, a 14, a 13? Absolutely, and that may happen if and when this market corrects, which it probably will at some point here. But right now, for this market, averaging in, I'm okay with that. Let's say Kimberly-Clark's PE were at like a 24 right now. I wouldn't be buying in. It would fail. Let's say Kimberly-Clark's PE was at like a 12. I would probably buy in because this is a world-class blue chip company, but when the PE gets that low, one has to wonder what the heck is going on. Is something really bad happening that concerns investors about the company's future? And so you always have to be cautious if a PE gets too high or too low, but when it's in its sweet spot, kind of between maybe 13, 14 and low 20s, that's fine with me. So let's move on. Next, what I do is I look at the history of dividends. So this I cannot do on Yahoo Finance. I do this typically on NASDAQ. I look at the history of dividends on NASDAQ for Kimberly-Clark, and what I do is I look for annual dividend increases, and I look how much has the company increased the dividend each time. And so there have been 4 dividend increases since 2013. They typically happen every year. And what I want to do is share, I calculated this myself, very easy to calculate. What has been the percentage increase each time? Well, the most recent one was 5.4%. The one before that was 4.5. The one before that was 4.8. The one before that was 3.7. Kimberly-Clark has a stable, wonderful, reliable track record of steadily increasing the dividends over time. Would I like to see it average more in the 5 to 7% range? Yes. They're hitting more in the 4 to 5% range on average. Look, it's close enough. Maybe if I were being really particular here, they would fail this filter, because this filter typically I hold it in the 5 to 7% range. That being said, I'm sometimes willing to trade dividend growth for stability, and this is a very stable stock, in my opinion. And so, certainly, out of all of these initial filters, and again, there were 7 of them. Have I heard of them? Of course they passed that. Is their market cap in my sweet spot? Yes, of course they passed that. Is the dividend yield, the current one, good? It's a good starting yield? Yes, they passed that. Dividend payout ratio, is it reasonable and sustainable? Yes, they passed that one. Price per share, am I getting in at a reasonable entry point, or am I overpaying? Yes, they passed that one as well. PE ratio, is it reasonable? Yes, I'm happy it's below 20, quite frankly, in this market for this name. Dividend history, do they pass that one? Maybe not with flying colors, but they get over the bar. They get over the bar. Like I said, I'd like to see even faster dividend growth. But what I do like about this dividend growth is it's not all over the map. It's pretty steady. It's always in this 4 to 5% range. 1 year is 3.7, round that up to 4, close enough. So the beauty here is yield on cost. I buy now. I hold it for a long, long time, for decades. Dividend grows each year. Eventually, like I shared in one of my recent videos, the yield that I will be receiving on Kimberly-Clark could be upwards of 10%. I hold it long enough, it could be upwards of 20% yield on cost. And that's just a function of them sustainably growing the dividends over time. And that's why the current yield is important, the payout ratio is important, and that track record of dividend growth, and also just having faith in the company. I have a lot of faith in Kimberly-Clark because their business model will only grow as the global population grows. And we know that the global population, especially in India, China, Africa, is growing. And Kimberly-Clark will be able to provide world-class products to these consumers. So this is part one of my series. Kimberly-Clark basically passes my filters. It makes it onto my watch list. That's it. This is very basic stuff here. This is just the beginning. I'm going to do several more videos in this same series, so stay tuned. Please subscribe if you want to see them. And I will share how I take now something from my watch list and I really start digging into the numbers to determine whether it works for me or not. So next videos are really important, but I got to start with the basics so everyone is on the same playing field. It's really important. Another note I want to share. I am putting together a free guide. I'm putting this together as I go through this series that is basically going to outline my personal analysis of Kimberly-Clark in Microsoft Word. And it's going to be something that I'm going to have a template where I filled it out and a blank template. This is going to be something that I want to share with everyone out there so that when you go home and you want to analyze your own stocks, for example, you can, if you want to, you could leverage my framework, or even maybe you don't like the whole framework, at least parts of the framework, and it puts a framework, it puts a process behind the analysis. It takes the emotion out of it. It makes it about following a consistent framework for all of the stocks that you look at. And so I'm looking forward to sharing that with you. Stay tuned here. When I do have that available, I will link in the description below. I'll probably do a whole video about it on how you can go ahead and get your hands on that free dividend stock analysis framework that I'm putting together. So I'm really excited about that. One thing I want to mention today as a friendly disclaimer, actually full disclosure, is I am a Kimberly-Clark shareholder, ticker symbol KMB. I have been for a while. I will be for a while. I love the stock. I'll probably not be selling that one for a very long time, and I continue to add to my position there. Also, as a friendly disclaimer, I am not a licensed financial advisor. Today's investment video is not financial advice. This video is just for your fun and entertainment. If you do want to go out and invest in the stock market, please do consult a licensed financial advisor first. My name is Ian Lopuk. This is ppcian.com. Thank you so much for watching. If this video was helpful, if you enjoyed it, if you like what you're watching here, I please ask you to subscribe, to like, to comment. The comments fuel the content for my future videos, and they're the greatest way that you can thank me personally for putting these videos here on YouTube together. I really look forward to seeing you in part 2 of this series. Stay tuned, it's on the way, where we will take something now that's on the watch list, it made it to the watch list, and we start digging into the numbers to determine, hey, is this a stock that really belongs in my personal investment portfolio? And before I end, again, this is just my personal framework. I am not a licensed investment advisor, and so again, when you go out, if you do go out and invest in the market, please do figure out your own way of navigating things and the strategies that work best for you. But what I am sharing here on YouTube is my passion and what has worked for me personally in the past and continues to in the present and future. And so I'm excited to finally share that with all of you out there. Thank you so much for watching. I will see you in the next PPC Ian Dividend Investing video.